Hi everyone, welcome. Want to make sure that you can hear me and that you can see the screen. Hello. Yes. Thank you, Bruno. I appreciate you so much. Okay, let's get into it. Very big week, as a matter of fact. Welcome to Market Kickoff. Some of us are in a blizzard. Some of us are watching games in a blizzard. And some of us are here. Or maybe we're doing both. If you're like me, got this up and the game, and you're sort of watching. So, great. You can look at it later with more attention, and we'll hop into the charts. But very big week ahead. Largest earnings week of the first earnings season. So we've got a ton of stuff that's going on. We've got news at the wazoo. We've got the FOMC, which should not be a big thing. And we've got some very big companies that are releasing earnings this week. So we're going to have ourselves a barn burner for sure. So the question is, how are we going to trade it? How are we going to play it? The next big thing, just to be a little wonky, is what's going on with the yen. And so because the yen carry trade has been around for 30 years or so, so maybe what is a carry trade? For those of us who might not know specifically what a carry trade is we go to some place and borrow money where it's cheap to borrow it, a la low interest rate, and we take that money and we invest it someplace else with a higher interest rate or a higher rate of return. And so the carry would be how much we're paying to hold the debt that we went out and bought in Japan. But that is getting unwound because Japan is finally raising rates. So I'm not really sure what's going to happen there, but that is a liquidity event. And if we want to see what happens when liquidity begins to dry up, the best chart to see that in is Bitcoin. And so what we're looking at is a daily chart in Bitcoin right here. And you can see that the chart's been sideways for the last bit, but if we drift down into the weekly, we can really see that the chart has had some trouble and is sitting at the base of support. Because I choose Bitcoin as a measure of liquidity, if this chart loses this 85,000-ish area, I think we're going to have a little bit of trouble. So while we're here, let's go ahead and talk about it because the markets will open in just a few moments. What we're staring down is, let's get a little box, shall we? Box. What we're staring down in Bitcoin is an inventory accumulation event that's been going on for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So you might say, what's inventory accumulation? So inventory accumulation occurs when price action begins to get cornered in a range. Now, we call that, as intraday traders, we might call that a range trading event. But what we're actually doing is collecting inventory. Now, some of us that are buyers are collecting inventory to sell on the upside. And some of us are sellers collecting inventory to buy it back after it makes a dip. So when you see price action landlocked like this, you know that it's in a bit of inventory accumulation, meaning the traders are arguing back and forth about where price is, but eventually they're going to wait for those break actions. And what are they? There's the move outside of 97,000, or there's the move outside of 84,000. Now, you might say, gee whiz, Anne-Marie, come on, you know we're intraday traders. That's a lot to look at. Yes, it is. But in large part, what your mind should be thinking is, well, if I get up here and I take a short, I better start thinking about buyers coming in around that 84,000 and be on the lookout for them. Doesn't mean that they will, but you do need to look out for them. Okay? So did somebody tell me 10 weeks and I actually only counted 9? Okay, so that's what we're staring at. Let's go to the daily and see where price action is going to move from there. As you can see, on Friday, we had a decision candlestick. It's a very small body candlestick. And so intraday, we would look for potential selling pressure underneath 88,000 or buying pressure above 91,000. And that's what we would stare down. For me, that's what I will be looking at. It does look very congested. So even if you take a short underneath that 88,000, support action could easily be 87,000. We're very landlocked. I would rather wait to see if I can get the edge of the bounce at 84,000 and then maybe have a very tight stop right there.
Order rejected.
Oh, crud. Let me... yeah, I think it'll be all right. It'll be all right. Last week, it did that to me, but if it happens like that, I'll log out, log back in. We'll be back. Okay. So, now that we stare that down, we know what we're looking at. Let's go to the ES. If we take a look at a weekly chart on the ES, we're going to see that we literally have been landlocked. Now, are they buying the dip? You betcha. They are buying the dip, no doubt about it. Are they testing new highs? Absolutely. They sure are. But what's happening after that? We're seeing rejections of new highs, and we're seeing the bottoms of these big candlesticks that look like they're going to break down still holding. So what do we want to stare down? We want to make sure that we hold higher highs and higher lows. This moving average here is a 10. You know, if you're looking at a weekly, a 6 is probably a better one, but most of us are not looking at weekly charts being intraday traders. All right, so if we go to the day, where we open up here really does matter. Now notice how Friday looked. Inside day, completely. Not only both of the bodies, this body is inside the body of Thursday. Very tight price action. Could you say to yourself, I think I want to buy above the close of Thursday. Not a bad idea. 69.40 or so takes us to the top. What is that close? Let's read it specifically. 69.40 and a quarter. So easily, if it moves up above that, you could see buying pressure. Now our 10 is down, but our VWAP is trending up. We are making higher lows, and we are sitting in a sideways pressure event. It does look like dips are going to be buys. So my thought would be, how about looking at Thursday's low or Thursday's close near 69.15, 69.16 to pick up the long. Let's see where the call walls are. Take a look at that for us. Okay, call wall 7,000, put wall 6,700. Now, those numbers fluctuate a lot, and really what they tell you in general is where big money has positioned the options to say, hey, let's see if we can catch these in between the range. We did put in a lower high. We did. Here's the thing. We still bounced into the valley that holds all of the congestion. But yes, if we take a look at the weekly, that's a good observation. Spiritual Tradie Podcast. Well, that's an interesting name. We did, if we look at the daily, we can see these lower highs. But if we go to the monthly, if we go to the weekly, we can see we're still trapped in this heavy congestion zone. My thought is, I'd love to take advantage of short action, but it really doesn't open until it gets below 69.13, or it bounces off of that 69.13 and then fails to get up over 69.40. If it does, that looks like a pretty nice short. Let's take a look at the NQ. 4 minutes until the open. Here we are at the weekly chart. Again, heavy congestion. Did we make a lower high? Yes, we did. Here was a high and then a lower high, and then a bounce and another lower high. But we keep buying the dips. We keep buying those dips, and that is pretty important for us to think about. What's going to be the most important thing for us to look at? Well, this is a doji, how we ended the week almost exactly where we started. So I think it's going to be pretty important to see which way we go. We are trying to break back up to test 26,000. Though we do have diminished liquidity, I read a very interesting statistic that said retail trading, as identified by someone, I don't know who, I asked them to validate their data for me, is up 40% since the year began. So if retail traders are in the market in general, retail traders will sell puts and buy calls. And so in that kind of environment, it causes this reflexive loop of market makers having to go into the market to buy. And so we still have a lot of updraft, even though we do see these lower highs showing up. It tells me that it's a mixed bag. And the best place in mixed bags to go is the top of the range, 26,000 or so, or the bottom of the range, 25,400, and position there. Now, if you watch my video, I do video every day, and I have something called the if and then. And so I say, if we test this area and we end up failing it, then we've got a short. So here's the bounce up into the range. If it breaks to the north and it returns to the candlestick congestion zone, then we get to sell it down to the bottom of the gap. Okay, so in here, when we have the if, we don't go directly to then. We have to see how the traders behave at that particular price. Okay, we have 1 minute until the open. Let's take a look at oil. Oil's been a beast, trying to hold up above its ledges. We have got some wiggly things that are going to go on in energies in the next couple of weeks, in my mind. Why?
The market is open.
the why is both geopolitical and need-based. And so here we are opening, let me do two things right here, keep my eyes. So we're opening with a gap down and immediately bouncing off of that edge. Let's, here's oil and here's my tight formation here. Notice it's rejecting the day. So we've got two thoughts. Either it holds the floor and we can go long, or it breaks out and we can go long. So how about we do a stop buy at $61.60. If it bounces to the upside, I am a little bit bullish into this space. Why? All kinds of reasons. But the 30-minute formation is telling us, listen, we've got a gap down and we're going to find a floor one way or another in the space. Could be at the VWAP right here, or it could be much lower to the south. My suspicion is that here's our 4-hour. Old resistance, new support. Let's put a limit order at $60.67. That's
Order
probably going to
filled.
trigger. All right. So there we are. That's a nice tight range. It could easily fade into these wicks over here. So I'm looking for a reflexive bounce. It doesn't necessarily have to give me all of that. I'd like to come back into the VWAP, right? So that one's engaged. We're going to leave it. It is what it is. And we'll be staring down. I'm going to release that one. We're going to be staring down what the chart's going to do. Why did I pick this area? Because this is a zone of congestion, and the traders are going to try and battle around it. Okay? All right. Let's take a look at silver. Holy smokes, look at this thing. It's got a case of the zoomies. Everybody's bouncing off the lows. So that's important to realize that we've got pressure that's bouncing off of these lows. Let's go to the daily here on silver. We've got clear breakaway. What do I think's actually going on here? We are in continued massive squeeze. Could it be also something real, like actual geopolitical risk or actual shortage? Yes, it could be all of those things. Absolutely could be all of those things. What I do believe it's being driven by is just the reckoning of short puts and long calls, and it's forcing the market makers into the market to do that. Okay, so that's what we've got going on right now. We've got silver. It's in a breakout. Where do you want to buy it? You know, maybe 50% of the prior day's move, of Friday's move, looks like maybe right around the 99.50 area. But I wouldn't touch it before that. I mean, I really wouldn't. Okay, let's go to gold. Gold also breaking out. My suspicion is that this is, just like everything else, is quite geopolitical and moving geopolitically, which is why I believe that oil is going to continue to run up, because it's going to follow the commodities. So I don't like it that it's lollygagging around here, but we'll see what goes. So for the gold trader, if you're staring this down and you're thinking to yourself, well, where's my good trade? The buy zones of risk are well below. It's very hard to take a trade long here and go, yeah, I got it. Now, you could scalp, with this 500 tick coming into the VWAP over here that I have on the right-hand side. You can see that and buy. You could try that right there and buy that. Not a bad idea. It's just got too much risk for me. I don't like that measure of risk. I would like for it to come down into a place where the traders feel comfortable, and that could be anywhere. Seriously, that could be all the way down at 4,987. That could be at the big fat round number of 5,000. It's a little bit of, you have to decide what's going on. All right. Thank you so much, Siggy. I appreciate that. Okay, so let's get back and stare down. Let's stare down the ES. So what did we measure out beforehand? We measured out Friday's range, and we've gapped down and tried to hold, but not doing a great job holding that low, right? So my thought would be, if we lose the heavy congestion, where might we tumble? My suspicion is that this, let's look at a 4 hour and see if something looks better there. That looks really kind of junky. All right. Here's the candle body. So my thought is stop sell at 68.75. Where would my target be? Down here at 68.38. Bottom of this 4 hour range. Now, here I am trending down. All of this heavy congestion, just lost it. That's inventory, accumulate, distribute at a discount. So what might I want to try? I might want to try a short at the gap fill. And that's going to be that trade. So either it's a short losing the low, or a short
order filled
losing the gap fill. All right, so my crud. All right, we got out of that. It just moved right into our resistance zone and we covered. So it's nice and easy. Here's the magnificent thing about taking these kinds of trades. Some of us trade and we are so zoned in that we can't even possibly think about putting up 2 or 3 trades in other markets. I totally get that. But the bigger your time frames are, and the wider you can see your structures and what needs to play out, you're going to know when a trade is going to very likely put in a bottom or a top, and if it doesn't, you've got your support structure taken care of, and you know where your stop is. So, hey, you know what, Felix? If that happens, that happened to me last week. Log out, clear your cache, and log back in. Works perfectly. So do that, and you'll be in great shape, Felix. Try it. Silver long, 104 to 105. Awesome. That's great. J, silver extremely liquid. Yeah, I'm not going to touch it. Thanks for being here, my dear friends. Jay and Hoop, I appreciate you coming in and taking care of things and being those extra sets of eyes and ears. I'm very, very grateful. Okay, so we see the ES. We know what my setup is there. Let's go to the NQ. See what the setup looks like. Oh, shoot. Here was the buy zone. right down here at the ledge at 25,380. So, do we want to try a long here? 500 tick. We're coming right into the VWAP. Look at the inventory accumulating on the 500 tick chart. But we are making higher lows, trying to get above that VWAP. I wanted to get above the VWAP and then come back and retest the VWAP. So we're going to have our eyeballs on that. This is not a bad long. It's not one that I would take without some confirmation. Ideally, the low edge of the range that I talked about, which was the low of the day for what? Oh, the close of the day for a couple of days back, then that's where we are with that. So I don't have anything there. Let's see what else we can do. Let's look at YM. Four-hour gap down. Let's take a look at the week. So very interestingly, YM had a really nice setup until about 2 weeks ago when it stopped breaking to new highs. Actually, it would be 3 weeks ago now. It stopped breaking to new highs and then started retracing the candlestick that gave us the first week of price action. And my suspicion is that's where we're caught. Now notice, last week, our low came right into that candle. Where we're sitting right now is heavy congestion. We had 1, 2, 3, 4 weeks sitting essentially where the top of this area is a box. So I would not be surprised to see buying action on any kind of dip into this zone. So my thought would be the buying action starts at, let's see if I wanted to get in there, I would put it at the low here, and that is 48,583. It's very steep. So if it loses that edge, let's go to a daily to see what my risk would be. Make sure I'm not doing anything knuckleheaded. Yeah, there's my buy. And so my stop I would put here at, yeah, that's a pretty big stop. Let's move it here. My stop would be at 336, so pretty wide. But if it does come in, there's a lot of reflexive buying right there. A ton of it, actually. An absolute ton of it. Okay. What else? Let's go to net gas. Of course, we anticipate this big fat bounce up here because, you know, most of the country is underneath a big pocket of snow and ice. And though it moved up fairly dramatically, we are giving that back. And the candle close, have a gander at the candle close from Friday. That is one ugly beast, I'm not going to lie. I would not want to touch that thing. All right, let's get our default here. Gives us a nice clean look. 50%, 3.8, else it goes to the value, the point of control, which is down at 365. I don't want to touch that either. Wow. Gold sitting in a little bit of a pocket. Let's see if we can trade. Let's see if we can trade gold. Let's take a look at the 30-minute chart. What might we look for here? Upside pressure for sure. Again, the risk is so wide. I don't have an edge here. It could be mean reversion. Look, we've got a high and then a low and now a lower high. The lower low would take us to this 5002 area. We could say, all right, let me try to buy the big fat round number. Maybe I'll get in front of it. And if it doesn't immediately hold it, I'll get out. Somebody might go, Anne-Marie, why don't you just buy a breakaway? Now, here's the thing. Let's go to a 5-minute chart. And I'd love it if you guys and gals would say to yourselves, hey, I want to ask this question. Just, let's see. Rallied on the early pump, micro silver, $1,400 profit. Wow, good on you. Good on you. That's awesome. All right. Hey, Coog. Nice to see you. So here's the thing. We always have these things that we can look at and go, oh my gosh, that looks great. It's running away. But unless it fits a pattern or a strategy that you think of and you use that says, I'm going to do this, it's probably not a good thing to do, because you're always going to be questioning, second guessing, la 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 la. And what I tend to see in all of these metals is that a breakout to a new space usually sees a reflexive action event. So here we are, that high, reflexive action down. Here's a high that's 2 ticks higher. Here's a reflexive action down. So the question might be, okay, if it's a reflexive action down, maybe I come into heavy congestion. The 5-minute is telling me that, well, I don't know. The 5-minute literally says the cheapest you could buy this and be a little exposed is 5,013. If you use the 500 tick and you go, all right, if I looked at old resistance, new support, that's this down here. If it holds and hits the VWAP, you could easily say, I like that. But the question is, what is the broad chart telling you? And it's telling you, here I had a high, a breakout high. I went to a new high and then I gave it all back. So who's to say that getting to a new high again doesn't mean you won't give it all the way back? That's a very strong likelihood, especially with a VWAP that's relatively flat, right? All right, so what shall we trade? Let's look at RTY. A lot of people trading Russell. Gap down. Let's take a look at the 4-hour formation, see what we've got. Okay, so chances are we definitely got resistance. Let's take a peek at, let's look at the daily. So buyers have come in right around here, but if we buy right there, we've got a bit of risk. We could take it, right?
Order filled.
We could take it. Our support zone, we could add to it in the range and see if we can fill the gap, right? I think that that's fair. I don't love it, but we do know that the small caps are well favored right now. And here's an interesting piece of information. Small caps have underperformed for over a decade. It's sort of like commodities that have also underperformed for a long time. And so because we're seeing market rotation, remember, big money does not move out of the market. It just finds other places to hide. Do you know what I mean? And so if we're thinking about something and we're saying, hey, where else would they hide? Because reversion to the mean is real, they're going to go to the places that haven't been performing and say, okay, let's crowd in there. And then we see they're crowding in there, and then we follow them. It really is the same old story, time after time after time. Okay, let's go to 30-minute. I want to see this. I'd like to see the gap fill. Oil is moving sideways now, so I don't have another trade in there, but let's see what silver does. Whoa. So that was a very big candlestick in silver. That was really big. 2669. Is that the number I actually want? Hang on, 26. I want to see what the actual target I need to have in RTY is. 2669. Oh, that's resistance right there, 2660. All right, so we've engaged in a very, very tight space. So I'm going to move the stop up because I suspect the VWAP should hold. We ran right into some demand. And so now we want to watch 70 is, 70 is the next line in the sand. So I like it. It looks fine. No harm, no foul. Okay. Any questions? I log every trade. I just made 4,500 on that gold open. Fantastic. As long as you prepared for it, it followed a strategy, you moved in when you were supposed to, and you took profit where you felt it was needed, all good. Great. Fantastic. That's really wonderful. I know you're going to go, what do you mean it's not about the money? Or easy for you to say, I hear that one all the time. But it's much more important that you followed a process that was yours, that you love, that you can see, and that you can replicate. Nobody else matters. It's great watching people make tons of cash, but it only matters if you're following your process and you're making tons of cash. If you're making tons of cash and you're not following a process, something wicked this way comes. I'm just going to tell you. True. All right. So tell me, who's under snow right now? Who's under snow in the chart? I mean, in the chat. I'm interested to see how many of us are in this sort of thing and managing the weather. ES is going down. Is it? Let's take a look. No, I don't think so. So here's what we're staring down. We have recaptured the VWAP. And we're holding the framework low. See where the stop is, right there. I think that gives us a pretty nice range, but I don't see anything that's telling me that it's going down. As a matter of fact, everything I see tells me it's going up. And so the question might be, well, where's it going? And it's probably going to try and take out this great big candlestick. Now notice, remember when we first started talking, we were looking at the daily charts. We were talking about this 69.13. So in actuality, right, we said, well, I said, hey, if we get under that 69.13, we're going to have some selling. So we wanted to get up over that 69.13 and hold. That's the big storyboard that we're staring down. You might look at it and go, well, it looks like it's doing it now. I mean, can't I take a trade long now? You could. You're just going to have 10 points of risk. And you might say, why 10 points of risk? Because trend is essentially down and the VWAP is essentially flat. And so when those sorts of things get together, usually tells you that price action is wiggly. Okay, so let's go back to our RTY trade. That's doing pretty well. It's moving up through its space. Now here's another thing. People go, oh my gosh, I got to move my stop. Well, what's changed about our formation in essence? Has anything changed? I don't think so. We still have a low formation down here at 2650, and we're still kind of holding this VWAP, right? We're above it. So what do we want to see? Now, here's the thing to remember as a trader. If you're constantly afraid of losing, that's pretty much what's going to happen. So you might go, hey, are you being kind of woo-woo with that? What are you talking about there? No. I'm just saying the following. If you don't give your chart time to breathe, and you don't allow the traders to battle because you are really, you might say to yourself, hey, I don't want to lose more than X, or I really want to make Y. Now, my thought is that it fills the gap. I don't know How quickly it will do that, I don't know that it will do that, but I do know coming up over this line of 2660 is very important. So I want to see a candlestick formation close over this level. I just started my second 30-minute candlestick, and it's holding up over the level, but I'm still awfully close to that edge. So I don't want to move my stop up to capture gains because I think it's got more to run. Now, the flip side of that is the following. Let's say you're a scalp trader and you're looking at this and you're staring down the 100 tick because the RTY moves a little slower. Okay? We've got our volume profile event. Everybody's pretty much been buyers. That's what the light color means. So things are moving very nicely. Even at this 100 tick, my stop is still break even. So if you're saying to yourself, well, I want to trade the rotation, then you really want it to have a good solid punch up so that you can move it higher if you want to participate in the move to the north. You don't have to do anything. You could simply go, hey, I'm done.
Order
I'm
filled.
closing my position. And yes, you're 100 and whatever point dollars to the good. That's great. But your system should say, wait, where should I hold based on what my strategy is telling me? If you are a Fibonacci trader and you have that first opening formation, you know that the 50% area, if it holds the 50% area, you're very likely to go to the 75% area. But how many times have we gotten into trades? We can see the upward propulsion of price. We get out, just like I did just a second ago. We get out of that trade, and then we watch it continue to run, and we end up chasing it and doing something to our risk profile that's terrible. That happens. Is your VWAP anchored? True, look at this. That's yes. And what is the red line? That's the VWAP. Is my VWAP anchored? It begins every day anew. So it's attached to the opening candlestick formation. I do anchor the VWAP quite often. So I might say to myself, why don't you anchor yourself a VWAP? I always forget where the VWAPs are sitting. Why don't you anchor yourself a VWAP at the low of this 500 tick? And let's change the color of that so you can see it. Make it that bright yellow. So what you can see, I anchored it right here, and I have open, high, low, close as, I think that's what it is. Let's double check. Nope. That's my default. Open, high, low, close. So as long as I stay above this anchored VWAP event, I'm in pretty good shape to hold that area. So the other trader who's saying, well, I'd like to walk up this formation easily, you could say, you know what? I'm going to buy that 2660 again. And this time, my stop will be tight because I know it has to hold this zone, because if it doesn't, I'm going to move down. But 2660 was that breakout level. So remember, traders were all just a wee bit neurotic. Why? Because we're going to run through a door, and then we're going to turn around and we're going to check the door to see if it's open or closed. And that is old resistance, new support. Essentially, that's what we'll be seeing. Got a small long off the rejection of silver, made $100. Exactly. All right. We got a little snow, but at 6,000 feet, that's not a, oh my word. Sunny today in Sydney. Yes, it was sunny here today too, but we had some wind. We've got some weather that's coming in that's going to be changing direction for sure. It might be warmer weather coming our way. Thanks, Stanislav. Sunny in Baja. Fantastic. All right, so let's see if this comes in and is the neurotic that checks the door and holds. We've got the anchored VWAP. We're making all these higher lows. It is the RTY. It's got a bid that's sitting underneath it, so it should come in and test us. So we sit there and we wait. So this brings up another topic. How do I know where I put my trade on before I put my trade on versus in the flow? And there are 100 different topics on this. 100 different topics. So what is key to remember is that big pictures matter. And the reason that I have this sitting in this ledge here is that it is essentially the low of this 30-minute candle as it sits right now. So I want it to come in and kiss that level and pick me up and then move to the north. Now, I am being a little bit of a cheapskate. I should have it filling right about here, but I don't really trust the market. So I'm going to leave it there. And if it triggers, good, we'll come back to it. If not, it is what it is. Let's go to the NQ and see what the NQ is doing. Whoa. Yeah. So, super interesting.
Order filled.
There we go. There's our RTY fill. So, interesting here. The NQ is down. The ES also moving down. And if all of these guys start moving in tandem, this is going to be very bad for RTY. But the 6,900 area, notice the 500 tick. Let's stare it down. I still have my buy at the bottom of this range. Could it be that it doesn't allow me to come in and get that level and the chart decides it's going to hold 6,900 and continue to the north? The traders are going to do that, potentially. Yeah, they definitely could do that. I'm just not willing to risk buying this on the cheap. Now, by the same token, you could say, you know what? I'm trading the 500 tick, and that says if I've got a moving average that's sitting underneath it as support, and I come back after I've made a new high, and I come back and test that low, that's a buy zone. Perfectly valid. Perfectly valid. Your stop should be one of the edges that show old resistance. But this is clearly an area you can say, here are the systematic reasons that you do it. One, you're sitting at a moving average, and that moving average is turning up. Two, it's been prior support. And three, I just made a higher high in the formation. So, easily this 6,900, 6,901 area works perfectly fine. For me, although I do believe that it could easily bounce from here, that's not a trade that I would take because I'm much more interested in watching price action resolve and see how this last candlestick closes, and it'll close in, 15 minutes. Here's another thing that we talk about, and that is, I'm going to cancel these, and that is what do we stare down when the first 30-minute candlestick has been built? And for those of us that worked together in the last VIP formation, you know that that first 30 minutes is very important. How the traders resolve around it, how they trade around it, all of those things really important. And if we lose the high, we easily could come back to that 50% marker. And that 50% marker is really right around where I would have that essential buy. Notice, do you see how the traders are trying to hold this ledge? Why? Because it was prior support. Because there's positive momentum. Because there's a moving average that's likely to press to the upside. Because my VWAP is up. Because price action is above it. So they're going to try and do that. The question is, will they succeed? But I'm very happy that the chart did exactly what we thought it would in this particular environment. So when you frame out what it is that you're trading, remember, think about, okay, what are these traders trying to do? Remember, though some of us get into the market and we have no idea what's actually happening, most of the people making money in the market, I'm going to actually say all of the people making money in the market, actually have a very definitive plan on what they are going to do while they're in the market. Okay, so what do we have here? Cancel that. Somebody says my account isn't available due to CME issues. I don't have any idea what that's doing. No such thing as definitely. Boy, you know it. No such thing as support and resistance. You know, I lived in Charlotte for a long time, and man, ice is just the pits. It truly is. It's the absolute worst. So Bruce Torres says, no such thing as support and resistance. It's all algorithmic price delivery. So everyone on earth is entitled to their own opinion. Whether I think your opinion is wrong or right has nothing to do with how you trade. So everybody's entitled. Here's what I know. I've been trading a really long time, and I would absolutely say there are areas that traders buy and areas that traders sell. And I call those areas support and resistance. Now, can support be broken? Absolutely. Can resistance be broken? Absolutely. Doesn't mean it doesn't exist. So, certainly, I know that my argument has not swayed your entire thought. I'm just saying to you, support doesn't mean an absolute floor that nothing goes under. Resistance doesn't mean an absolute ceiling that nothing goes above. That just is not how those words are defined. If you choose to define them that way, it might be the problem. However, we'll just leave it as it sits. So, here we go. They're dancing around the ranges. Chart's having a really rough time. You know, it is what it is. We've got sideways motion. Here is how I will leave us today. Number one, trading tonight easily could be very sideways. If we lose the low of the opening candle formation and then recover it, we probably are going to have ourselves long upside rotation into at least the 50% range. If not, we will slip back down and head lower. But wait for these breaks to confirm themselves before you decide what direction you're going to go in. All right? All right. Thank you so much for all the love. It's always fantastic when I'm here. Makes me feel great. Hit the like button for me. What else do I want to say? Be careful. Don't size up when you don't know. Oh, thanks, Yaz. Yeah, don't size up. And here's the thing. If you can spell your name and you can add and subtract, you have every skill required to begin to trade. Literally just about anyone can trade. The trick, if I might call it that, is to say, do I understand every time I engage what my risk is? And if I hit that risk, does it mean I don't get to come back and play tomorrow? If you can answer that every day, you're going to sit in a good spot that will allow you to improve and excel over time if you continue to learn the market lessons that you can learn in basic auction theory. Because all markets are is an auction. And even though we're behind our screens here, when we say bid, we're saying, hey, I want to buy that. If we say ask, we're saying, hey, would you sell that to me? Right? And so, or I'd like to sell that to you. So just remember, in its most simple form, we're just trading apples over the counter. I'm trying to buy my apples cheap to sell expensive, or I'm going to try to sell apples expensive and buy them back cheap. That's all these candlesticks are. So when you sit down and go, wait, what are these traders trying to do? You can storyboard it and help yourself that way. You know what, J.M. Hardy? That's actually a great compliment. I used to be a statistics teacher, and so that warms the cockles of my mathematical heart. Anne-Marie, what is my opinion on treasuries and bonds? Well, my opinion and $6 will buy you a cup of coffee at Starbucks. First of all, I do want to say that. In grand fashion, I would say that the bond market is incredibly important, and we've got a lot of things going on with it. And as a trader, it's important that we watch those, but in terms of trading them, I tend to shy away because the market is very big and there are a lot of moving parts that I simply do not understand, if I'm going to be completely transparent. So I kind of like to understand the things that I'm working with. The bond market gets really kooky. Here's what I know. If we have massive liquidity events, at some juncture, the central banks will come in and try to right the ship. So there's always some kind of crazy floor underneath us, except if the floor breaks. Now, we'll be in a whole lot worse shape than a lot of things if that floor breaks. So that's really what we're staring down. How can traders counteract greed? You know, I would not be a good person to ask that question of, because greed is not an emotion that I have ever struggled with. I, however, struggle with fear. And so that I would have to punt and give that to someone else. My focal points have always been, okay, can I get to my support? I have never held something while it's running up well past my target zones and say, okay, I'm adding to that. I literally have never done that. I struggle with fear. And so that maybe it would be someone else to ask that. Thanks so much, Square. Is RTY my preferred symbol to trade? No. It was the one that was most, it was the one that had the best setup today. That's a great question, Josh. I just look for where the best setup is sitting, right? My early trade I took in oil because that was a great setup. So I was finished with oil, and then I said, all right, let's play with this for a while because it looks better than the others. And because I know there's a much more pervasive bid under RTY right now because of the power of small caps, because retail traders are moving into the market more, and so on and so forth. Okay, all right, everybody. Thank you, Bruno. Thank you, Jay. Thank you, Hoop. And thanks to each of you that came and stayed with me tonight. You know what? Time's something that we never get back when we spend it. And so that makes me very grateful that you spent it with me. And I hope it was worthwhile. So I'll see you all on the streams. I'll be in group coaching tomorrow on TopstepTV. And, maybe we can talk to Hogue and Hoop or Deanna, whomever is there sharing the time with me. We could talk to them about that greed question. I think it's a really, really good one. All right. Take care, everybody. I'll see you soon. Oh, listen. Stay alert. Stay alert. The market is a crazy place. See you.